conversation on the couch with our industry colleague, Mr. Paul Grant. Today we're going to be discussing how COVID-19 has affected our industries. And Paul, welcome.
Thanks,
Thank you for coming and sitting on the couch with us.
Pleasure, nice to be here.
Awesome, excellent. So could you give us a bit of an overview on Phipps Finance, your role and what it is that you do in our industry?
Absolutely, yeah, thanks for having me, Chenoa. So I'm a finance broker with Phipps Finance. I'm based here on the beautiful Sunshine Coast. Our business helps clients buying into the accommodation sector, primarily management rights, but also motels, quest service apartments, etc. So yeah, our role is helping people out who want to buy into accommodation. We negotiate their finance package with the bank once they ultimately want to buy, but at the outset we give them a hand in terms of working out what their budget might look like, having the fun chats with the banks, and then helping them get through to settlement and getting one of these beautiful businesses.
So ultimately, you're a very important point of buying your management rights, because without you, we wouldn't get any money.
Unless you've got the cash in the bank, that's exactly right, yeah.
Absolutely. So Paul, we found that the spread of the coronavirus has really affected everything from the way that we live to our economy, and also the financial and social impacts that it's having within our industry. What are the effects the pandemic is having on your industry and lending on management rights?
Yeah, good question. So I think March 13 was D-Day for us. At that point in time we had a number of contracts on the go, and unfortunately a lot of those got terminated. So where people didn't have unconditional finance, most of them decided to put things on hold. Importantly, the feedback we've got is most people actually put their deals on hold and have said that they're going to come back. And in fact, the phone started ringing as the good news, and we're filming this in late May. Good news is starting to filter through. So my phone started ringing again and a lot of those are those people that put things on hold. Obviously, funding, particularly short-term accommodation business at the moment is pretty tough given what's happened.
Absolutely understandable.
Got to say one thing, that the banks, people don't mind bank bashing, but the banks have been great. So supporting clients that needed a hand by interest deferrals or repayment holidays, and they were really on the front foot helping people out. And what we've seen is most of our clients, that's all they've needed. They haven't needed anything over and above, because there's other fundamentals of our businesses that we sell and finance that are helping them get through.
That's fantastic to hear. So no bank bashing.
No bank bashing.
Friends,
not today.
Give them a cuddle today. That's very good to hear. And tell me, what initial impacts of the virus affecting the travel and holiday industries? Many managers are asking us all the time, can we sell our business? Is it actually saleable in this market? From a lending perspective, what are your thoughts?
Well, it's hard, don't get me wrong. It's very, very difficult, but every transaction we've got to look at on a case-by-case basis. There's good reasons why transactions are still going through, and we're still doing deals at the moment. Don't get me wrong, it's not easy, but we've got clients that are buying businesses and they don't need the cash flow from the management rights to show the bank they can service the debt. So we can potentially get a deal done. There's some challenges in terms of valuations, and I know you're going to have a chat with the valuer at a later date to get their thoughts on that. But big time, the message at the moment is case-by-case basis. Don't throw any opportunity out. There might be a buyer and there might be a transaction to be done, even though parameters have changed slightly.
Absolutely, I like it. Glasses half full.
Always.
Fantastic. And what are you hearing, talking to all the bank managers and the relationships that you have with the banks? What are they saying about lending, particularly in the holiday sector? We're hearing a lot that they're not lending and they've completely stopped. From our conversation, I'm not getting that feel and that vibe that the banks are feeling that way. Is there any banks in particular that are not wishing to lend on holiday at the moment?
Well, there's stories about, I won't name particular banks, but there's a lot of misinformation out there about what banks will and won't do, and there's stories about particular banks that have shut up shop and are not lending. One in particular I can think of, but that bank gave me a quote for a short-term management rights yesterday.
So the tables are turning.
Well, not necessarily the tables are turning, but the circumstances of that transaction worked. And we were able to demonstrate to that bank why it was still a good idea.
So again, a pivotal point is making sure that your finance broker that you're working with has the relationships with the banks to show a bank that this transaction can actually work.
And there will be transactions that don't work, that would have worked in February that don't. What we're saying to people in those instances are, if you still want to sell, if you still want to buy, maybe it's worth putting the transaction off. We've got, I can think of any number of transactions we've got at the moment that are simply on hold.
Okay.
Willing vendor, willing buyer, the agents advise both accordingly, and we've made an agreement that when we've got some great signs and some good, crystallised bookings and the P&L starting to return back to normal, we'll pick up the deal and off we go again.
So hopefully this travel ban being lifted will help those transactions to continue to go through.
Absolutely. Yeah.
Fingers crossed.
Fingers crossed.
So with so many people out of work and the Premier of Queensland introducing new tenancy laws, current managers and potential operators are worried this virus may actually affect some of the permanent management rights. What are the bank's stance on lending for the permanent sector? Because it is quite different to holiday.
Absolutely. And look, most of our transactions are still on foot are permanent management rights.
Okay.
And most of the new ones we've received since the D-Day of March 13 have been permanent. So it's certainly the flavour of the month at the moment. And there's underlying fundamentals as to why.
Absolutely.
I can tell you if a bank manager had a choice of a holiday resort or a permanent to look at, they're going to look at the permanent at the moment just because of what's going on. You can't escape that fact. The good thing with permanents, and we've got clients all across the country and obviously centralised in South East Queensland, we haven't seen the Armageddon in terms of rental arrears and vacancies that perhaps was thought might come.
Absolutely.
Will it come when things roll off and bank holidays come off in September and the JobKeeper and JobSeeker finish? I don't know, I really hope not. But all the stats we're seeing is that those arrears and vacancies are actually occurring in Sydney and Melbourne, very fundamentally different markets than South East Queensland. So the stats and the news we're seeing is good. Permanent management rights are what I think is one of the more solid asset classes right now, and we're still seeing deals get done, and deals getting done without enormous discounts or sometimes without any discounts to pre-COVID levels.
Excellent. So we're still seeing higher multipliers being lended upon within the permanent sector.
Correct. Yep.
Great news for permanent managers.
Absolutely.
And moving forward, can we expect a different lending percentage? Because current lending percentages at the moment, are we going to see the banks claw them back a little bit just for security purposes?
Oh, look, I think very broad level, and you're going to get sick of me saying case by case basis, but again, case by case basis. We're thinking at the moment, if we're talking to someone, we should start at 65% gearing levels.
Sure.
That should be our baseline. There may be great reasons why a deal works at 70%. We might get banks interested. We've got experienced client and some really strong facets to the deal. We might get finance approved at 70.
Excellent.
The flip side may occur. Deals might not work at 65. They might only work at 50.
Perfect.
But boring, but case by case.
That's okay. So tell me, in the case by case, do you think that clients with experience are more likely still to get a higher lending capacity? Because I wonder whether we will see more first-time buyers enter the market with redundancy packages and so on. Will the banks still lend to first-time operators?
Absolutely. To the first part of your question, yes, I think our job is to present any deal as strongly as we can to a lender. We've got great financial statements, we've got a history of the business being profitable, we can show the business might have taken a hit but it's returning to profitability or really strong numbers, and an experienced operator, that's a really strong case. I'm going to get a much better response than if I've got some really old financial statements, no forecast numbers, and a first-time operator who's never touched the business before.
Sure.
Not to say I can't get that deal done, but it might be different. The banks will look at it. They look at things on a risk-weighted basis.
Absolutely. And as Glenn mentioned, we're a bit of a fan of 3 years figures here.
We are, and look, our business has always been a fan of it. I like the moment we've got an opportunity to present deals to banks. There's going to be a blip on the radar. There's going to be a COVID blip.
Sure.
What I want to do when I take a deal to a bank is explain to them this business has been profitable for a number of years. Here's the evidence. Here's financials going back 2-3 years that shows where it's at and why that profitability is sustainable. Here's a blip on the radar, and here's our way we're going to chart our way back to what those numbers look like. You're an accountant reviewing those P&Ls, you're going to feel confident on that. You're a bank looking at it, you're going to feel more confident on that than you are on a set of P&Ls for 12 months that might be 3 or 4 months old.
Absolutely, 100%. You heard it here first, guys. 3 years. Alrighty.
I've got back to point, Chenoa. If we don't get 3 years, I still think we'll get deals done. But again, it's that risk assessment.
Absolutely.
What is a stronger proposition if you're looking at that to lend money?
Perfect.
I think that's an important point.
I think that's a very important point. So I do think moving forward, 3 years is going to be.
I'd love to see 3 years all the time, but I recognise sometimes we won't. And I don't think that'll be a deal killer. It'll just be a different deal.
No, I definitely respect that. And do you think that the bank's position that they still find management rights a secure business model?
Without a doubt, yeah.
Good.
And I alluded to it before. We've assisted so many clients. We've got clients, hundreds of clients around the traps. When the pandemic hit and the rubber hit the road, we assisted a lot of our clients in getting bank deferrals. So they've put their P&I commitments or their interest-only commitments on hold for 3 to 6 months. The next stage of that was, guys, do you need a hand with some cash flow injection?
Sure.
Do you actually need some money in your business to get through this period? Of all of our clients, I've had one that said yes. So the rest of those clients are able to combat the worst economic conditions in 100 years
Absolutely.
without additional cash flow.
That's
So we've got a
amazing.
body corp salary that's really strong.
Yeah.
It's helping them get by. If you're a permanent management rights, you might have a small blip on the radar, but they're trading really well from what we hear. And the holiday guys have been able to bunker down and get by based on what's coming through the door without needing additional capital. And that point hasn't been lost by our friends at the banks.
That's great.
Long answer to your question. The short answer is yes.
Good.
Strong business model for sure.
Paul, thank you for being so positive today. It's really nice when everybody's going through a situation like this to have some bright light at the end of the tunnel when it comes to management rights. So thank you for your honesty, thank you for your time, and I'm sure if anybody needs any finance or has any questions, be sure to give Paul a call.
Please do.
Absolutely. We'll pop Paul's details at the end of this video, so feel free to give Paul a call.
Lovely. Thanks for having me.
Thank you.